I think the meltdown of Terra and the meltdown of Luna and the meltdown of the Wildcat exchanges, the meltdown of FTT, the meltdown of FTX, all of those has put the fragility and the defect in architecture of the crypto industry front and center. The regulators have been rousted out of bed, to go on television to answer questions. Congress has been lit up. You're going to see every agency thinking about this. You're seeing mainstream media writing about this. The Wall Street Journal has got story after story after story after story after story. And unlike writing stories that, crypto is like Bitcoin except more energy efficient, that was the story a while ago. The stories now are, and you saw it when I was on CNBC, I said, BTC is not FTT, and every one of the anchors nodded and said, yeah, you got that right. It's pretty obvious why. So the meltdown of the crypto ecosystem is educating an entire generation of mainstream journalists, mainstream investors, mainstream regulators and policymakers, and they understand that now they have to do something, and the regulation that's going to come is going to stop the scams, it's going to stop the self-dealing, it's going to provide a framework by which people start to understand the difference between an ethical, economically sound, technically sound asset and a fair, equitable, principled approach versus an unethical, uneconomically sound, untechnically sound, unregistered security. I think another big part of what's going on right now is the other side of this, which is investors in the mainstream are going to understand, based upon results, why a digital commodity is a better idea than a digital security. And that's happening in front of our face. I also think that regulators are going to have to move. They're going to move much faster. And as they move much faster, they're going to lay down expectations of the registration process to become a digital security, a digital currency, a digital exchange, especially those three. Those are going to be hot buttons. And as that happens, what you're going to see is that 98% of the stuff in the crypto ecosystem is going to shake out. There's going to be a few strong players that will go through the registration process, and they will grow up to be a registered, fully disclosed currency, like a Circle or a Tether will have to become registered and regulated. There may be a few digital securities. There'll be a massive fight over what that means and what you can do with it. The digital exchanges, both the crypto exchanges and the DeFi exchanges, will have to register, and this entire Wild West environment will start to dissipate. It'll be like the meteorite that hit the Earth, 80 million years ago, and a lot of stuff will get wiped out. A few things will rise out of the crypto ecosystem that'll be cleaned up, and then a lot more mainstream actors will enter this space. Mainstream investors, mainstream banks, mainstream financial providers, registered companies, and the entire industry will take on a new character. First, the ideas. The crypto industry has some good ideas. One good idea is a digital commodity, the ability to move something of value point to point between 20 billion computers at the speed of light and program it with final settlement. That's a good idea. It has not nearly been fully realized. At the point when 8 billion people are swapping value back and forth, and at the point where millions, if not tens of millions of websites are swapping value back and forth at high frequency, and I mean like 100 times a second, 1,000 times a second, million times an hour, billion times an hour. When that happens, we'll have realized the potential of a digital commodity, because that is the true internet of money, money over IP. And Bitcoin is the first asset that could serve as a digital commodity, and Lightning is the first open protocol that we've seen, open, permissionless, ethical protocol that has the transaction speed to traffic digital commodity. And of course, as we know, a digital commodity is something of value that moves through space. A digital scarcity is even better than a digital commodity. A digital scarcity is an absolute capped commodity, 21 million forever, right? If Bitcoin had been built without the halving protocol and it just kept adding 3 or 4% of the supply for the next 1,000 years, and it was otherwise distributed in an ethical fashion, it would be a digital commodity, but it wouldn't be a digital scarcity. In the absence of the real Bitcoin, it would be the best idea right now. But in the presence of the real Bitcoin in a market, the digital scarcity would actually get the majority of the money for long-term store of value. And the digital commodity would actually just be a short-term, convenient, maybe medium of exchange. It might be similar to like gold and silver, where gold demonetized silver, and silver couldn't hold its monetary premium. In any event, that digital commodity, that was a good idea. Digital scarcity is a world-shaking singularity idea. But the other ideas, and the other ideas that the crypto industry worked on were a digital currency, and the most successful manifestation of digital currency is Tether. And the idea that people in Lebanon want some dollars, and people in Argentina want some dollars, and people in Nigeria want some dollars. And the only way you get dollars is with a credit card on a Western bank. And so for the billions of people that don't have a credit card in a Western bank, they don't get dollars. And you go to your local bank, you don't get an account. And if you do get an account, they steal your money. And if you have dollars in a bank in Argentina or in Lebanon, when the banks freeze, they will devalue your dollars, convert to local currency, and freeze it or steal it. So the second, really, this other big idea is digital currency moving on 8 billion Android and iPhones between 100 million websites at the speed of light. And that's a mega idea. In the near term, it's a $10 trillion idea. And the reason that people use Tron or Ethereum or any of these other networks is it was easier to move digital dollars around, and Bitcoin didn't support digital dollars on the Lightning Network. So a lot of the energy came from digital currency that we didn't support in our ecosystem. If you put those digital dollars on Lightning and you secure Lightning with the Bitcoin network, that $1 trillion demand will be met on the Bitcoin network, and then it'll become a $10 trillion demand. And as Bitcoin is becoming a $10 trillion network, that digital currency network will become a multi-trillion dollar network as well. And both of those will spread to all 8 billion people. And what will happen is they will squeeze out the local fiat currencies. Everybody on Earth, they want to trade cross borders in dollars. So a lot of the crypto ecosystem has been fueled by demand for digital currency. The other thing that people want is they want digital tokens. It's like the musicians, the actors, the artists, they want to monetize their brand. And they're not evil people, they're not unethical people. They're people like Prince that said, look, the music record labels hijacked my image and I'm a slave to the record labels and I want to get my brand back. And so that audience of 100,000 major creators and millions of mid-level creators, they would love to tokenize their brand, and they actually went to the crypto ecosystem to do it because you couldn't do it on the Bitcoin base layer and there was no Lightning protocol to do it. And so they brought their notoriety and their marketing cachet to the other cryptos, where then they were monetizing some unregistered security token. And so the moral hazard is to try to do a good thing in the wrong way. Giving dollars to Lebanese is a good thing. On a altcoin, right, is a bad thing. Giving a token to a celebrity or an artist is a good thing, but doing it on an unregistered security is a bad thing. Creating a digital security, like I want to spin up a security, I want to do it in a week or 2 weeks. I don't want to take $25 million up front and spend $20 million a year to maintain it, and that's the old way. That's how MicroStrategy does it. I have an army of lawyers and accountants. If you could do it quick and easy, orders of magnitude quick and easy, there's a place to create a digital security for the local bakery, a digital security for a small, mid-sized company. Why can't 1 million entrepreneurs create their own digital security and sell it? Well, right now, because they don't have $50 million, right? The barrier to entry to sell equity has been too high. So the idea is empower someone to create a digital security. But the way to do it is unethical when you do it as an unregistered security manipulated in an unregistered exchange or an unregulated exchange. So if you look at all these ideas, digital tokens, digital securities, even a digital exchange, why can't I trade Apple stock on Saturday afternoon? Why is it that if you have Apple stock, your bank can actually lend it out and get yield, but you can't? You have no property rights in your equity if it's on a traditional 20th century bank. They have the property rights. They can lend it, they can get yield on it. You can't trade it, you can't get a loan on it from someone outside of your country. They have a monopoly on lending, a monopoly on yield, a monopoly on custody, and they only work bankers' hours from 9:30 in the morning to 4 in the afternoon, 5 days a week. So they don't work 80% of the time. So the idea of a digital exchange that gives you property rights, that works all the time, that doesn't charge you 100x more, that allows you to lend and borrow, these are good ideas. The problem in crypto, Corey, is they're all good ideas executed in a technically unsound fashion, in an ethically unsound fashion, and in economically unsound fashion. So the next step for us is clear out all of the unsound practices in the crypto industry and bring the good ideas to Bitcoin on top of Lightning, so that you should be able to run your exchanges via Lightning, your tokens via Lightning, your securities via Lightning. You should be able to run your currencies via Lightning. And why is it technically sound? Because it's channel-based. It's like a shared nothing, infinitely scalable architecture where only the value in the channel is at risk. It's just an obviously better way to give functionality to 8 billion people.